Base minerals company Infrasors came out with first half numbers this morning. Earnings per share up marginally to 4.4 cents and turnover increased 4.8% from the comparable period last year to 131 million rand. Let's cross now to the JSE to unpack the numbers further with Trevor Robinson, CEO of Infrasors. Thanks so much, Trevor, for joining us this morning. Well, I've gone through very briefly there the headline figures. We've had revenue up 4.8%, gross profit up 3.9%, and net profit 5.1% to the good. Run us through the year that was for the company and factors that really came to bear, because you've got exposure to the industrial, mining and construction sector as well.
Yeah, morning, Lisa. Thanks for having me along. Our results have been steady for the last 6 months. We consider them really as a pleasing set of results under the circumstances that we operate in at the moment. It was a volatile 6 months in the fact that we were exposed to the steel and allied strike that occurred in July. That impacted us fairly seriously in July and then sort of went through into August as well before it really came right again. To give you some sort of example of what happened there at our Littleton Dolomite mine, they lost 16% of their production as a result. Our Marble Hall mine lost 26% and our Delfsand mine lost 20%. So that impacted through at a time when we were really having a good run on sales during that period.
Just taking a look at that fact, I mean, as you say, the company negatively impacted by the industrial action that has come to be somewhat of a seasonal factor. Just what kind of risk mitigators do you have in place to kind of safeguard against that risk on a year-on-year basis, Trevor?
Internally, if it's with our own personnel, it's fine. We can deal with it. But when it's something like this, where we're a third party to what happens, effectively we've got to grin and bear it and deal with it and scale down as much as we can in tandem with the clients that we're supplying. It's one of the factors that we have to deal with in South Africa currently at the moment.
Run us through the kind of activity then you're seeing in the sectors, because you say that you've seen an increase in sales volumes and revenues in the first half, and that in the face of an unsettled economy. But one would have to assume that this varies depending on the sector that you're talking about right now, with the construction sector, for example, still under distress, while you've got the mining side of things starting to pick up slowly but surely.
Okay, just to run through the sectors that what we're supplying into is the metallurgical market, which is the steel market, the foundry market, and then we have a leg into construction, and then we have a powders which we supply into the coal mines and into agriculture. Now, if I look at each of those in turn, the foundry has been steadily growing, and we still foresee that going ahead. They are slowly recovering. The metallurgical market has been an up and down market for us in the last 6 months. We've seen that a lot of the major players have undergone sort of maintenance and upgrades to their plant, and then they were affected by the strike as well. So for us in the 6 months that we saw, we dropped in terms of the metallurgical market down 17.5% from the previous 6 months. Foundries were down 12.5%. But on the other side, we were lucky to deal with the construction market and were successful in obtaining, albeit in very competitive market, contracts in the local private construction market. And there we saw our sales go up by 14.5% over this last 6 months. Powders, though, we see are still very sluggish at the moment, but we foresee a better uptake in the first quarter of next year. So it's a mixed market. We are in various markets. Unfortunately, we are from that perspective. The fact that some are up and some are down. It's nice when they all go at the same time.
You mentioned that sales are up in the construction space. To what extent are you looking at competitive prices, though? I mean, what kind of erosion are we seeing in your pricing power within that segment?
I think it's more a function of where our locality is at the moment. Most of the sales have come out of our Littleton Centurion Dolomite mine in Pretoria. That is well located in that area. There's been a number of private projects that have taken place, are currently on the go at the moment, and we've been able to participate in those projects. So those volumes, the projects are normally 12 to 14 or 16 months duration. So we'll see those sort of volumes continuing through in the next 6 months. We're fortunate, but construction market is a very short look ahead. The following 6 months is anybody's guess at this stage.
Let's take a look at the road ahead. I mean, going forward, what's your outlook? Because you've continued with capital expenditure that coming in at 11.9 million rand for the period. Moving forward, what can we be expecting from the group?
Look, we've been working very hard at trying to secure our base. We've continued with CapEx, though prudently, and in areas where we've deemed as necessary and where we could give us flexibility in the market. That's certainly paid dividends, and as we can see in the case of Littleton, where the uptake in the different construction products we were able to do quite easily. So we're comfortable with the volumes we can produce at the moment, if the markets all come through at the same time. And we'll continue with that at the moment. With CapEx where we believe it's necessary. The other areas that what we're working very hard is on the regulatory approvals. In the case of Littleton Centurion mine, we've just expanded the footprint and we had approval for that, so that secures our future life of the mine. We're under a current exercise with the Delft Sand mine as well to increase the mining footprint. And then we have a new project for us, a new alluvial silica mine, which we've called Delft Cullinan. We've done the geologic exploration on that mine. It's proved very positive. We're busy with the specialist studies to get our regulatory approval. So we're hoping to get that up and going during the course of next year.
Well, Trevor, let's leave it there. Thanks so much for your time this morning. Trevor Robinson is CEO at Infrasors, running us through the company's results, which were released this morning.